2025 is almost over. That means this is your last chance to save thousands of dollars on your tax bill this year. But you have to actually act right now. Otherwise, odds are you'll be overpaying on your taxes for no reason. So in today's video, I'm going to show you the three simplest and easiest steps that you can take right now to save on this year's taxes. But what are those steps? Step one, you want to make sure that you are contributing to a traditional IRA. Number two, you want to contribute to your HSA or your health savings account. And number three, you want to make sure that you are prepaying your expenses in December before the end of the year. These are the exact steps that I use with all of my clients as a licensed CPA. So if you want to work directly with me, click the link in the description of this video to apply to work with us. Without further ado, let's jump into it. So step number one is what we want to call contributing to a traditional IRA or traditional individual retirement account. Now again, there are all types of retirement accounts, but we want to focus on things that you can do today to lower your taxable income. And the only way you can do that today, or the easiest way, is what's called a traditional IRA. We are not going to worry about Roths. Now, one of the beautiful things about IRA, or a traditional IRA, is that anybody with earned income can contribute to an IRA. Now, you guys might be wondering, what exactly is earned income? And I want to show you guys. This is straight from the IRS. So as long as you guys have things like wages or salaries, if you earn commission, self-employment income, think 1099, alimony, non-combat pay, basically all of this stuff, anything in this box means that you can have an IRA. There is no age limit either. Now, there are some things that don't count, such as interest and dividends, pension, but we'll jump into that in a little bit. But I just want to show you guys that it's anybody with earned income. Basically, almost anybody with a pulse and has a job. Now, there are limits on this. You can't contribute all of your income. There are definitely limits. In 2025, you can contribute $7,000 per year per person. So if you're married, it could be $7,000 in your account and $7,000 in your wife's account. Now, also, if you are over 50, you get to deduct or contribute an extra $1,000, and you can put in $8,000. Now, one of the things that I do not like when I see people on social media and they talk about this, they don't really show you what's real and what's not. So I want to show you guys that are straight from the IRS deduction or IRS instructions. Again, right here. In 2025, it shows right here, $7,000, $8,000 for individuals 50 and older. We're not going to worry about different phase outs because that gets a little bit too complicated. And we just more want to focus on what are things that you can do today. Now, back up to our list here is that, again, the contributions, they reduce your taxable income. And the beautiful thing about this is that you can actually contribute all the way up until April 15th of 2026. So you guys can open the account today, and then you can contribute January 1, or you can contribute all the way up until you file your taxes. I do not recommend doing something like that because I don't want to be last minute. Now, again, I want to show you guys in the instructions where all of that is. Right here, you can open a traditional IRA at any time. And I'm going to show you guys exactly how you can do this in just a little bit. But again, this is straight from the IRS's mouth, or the horse's mouth, is that you can contribute. And again, right here, when can contributions be made? As soon as you open your traditional IRA, contributions must be made in the form of cash. So you guys can't contribute gold or anything like that. And again, right here, contributions must be made by the due date of your tax return, which is April 15th. Now, you guys might be wondering, why does it say 2025? We're at the end of 2025. The reason is that this instruction manual actually hasn't been updated yet until 2026, but it's more so that you guys see this. You guys can do any of this stuff, and it's right here in the IRS code. Now, one thing that you guys do want to watch out for is if you have a retirement plan at your workplace, your deduction might be reduced, and there are some phase outs. However, I don't want to get too far into the weeds because it's all about stuff that you can do today, and there are too many if-thens. Now, the biggest thing that I want to tell you guys is that it's simple, fast, and easy. You guys can do this today. For example, show you guys here, if you just simply Google or go to Google, open an IRA, and use E-Trade. Again, I just picked E-Trade. Doesn't have to be that. You can use Fidelity, Charles Schwab, any of these. And you go to that page, you can find a button here that says open an account. And literally, you guys can open it. It is just like a bank account. It should take you maybe 10 minutes tops. And now all of a sudden, you guys went from not having any deductions to finding $7,000 in deductions. And again, I want to show you guys here in the IRS tax code or in the instructions. It tells you right here, you can open an IRA at a bank or other financial institutions. Trust me, guys, Wells Fargo, E-Trade, Charles Schwab, Chase, they all have these. And it's right here in the IRS code because a lot of social media gurus or whoever these influencers are, they never show you guys where it is. And it's right here in the code. That's what separates and why people like working with us. Again, shameless plug. If you guys want to work with us, click the link in the description of this video and we will take or help you take care of this for you. Now, the second strategy that I have all of our clients do is that if they have a high deductible plan, which most of us have, or high deductible health insurance, is that this is the best account. The reason why this is the best account is that I like to say is that it is what is called triple tax deduction benefit, meaning that any money that you put in is deductible, anything that grows is tax-free, and withdrawals are always tax-free, assuming they are medical expenses. Now, let's go back to the beginning of this. Again, the really only big thing that you have to have is what is called a high deductible health plan. And again, this means that your deductible on your health insurance is the minimum is $1,650 if you're an individual, $3,300 if you have a family or you're basically married. And again, the max is $8,300 or $16,600. And again, here are the contribution limits. The IRS sets these every year. In 2025, you can contribute $4,300 if you are not married, $8,550 if you have a family. For whatever reason, normally these limits are doubled, but that one wasn't this year. Now, very important, if you are over 55, you get to contribute an extra $1,000. So that would mean $5,300 if you're an individual, $8,550 if you are a family or married. Now, one of the things that I like to do as all of these, and again, last thing, I almost forgot this, is that you can contribute for 2025 all the way up to the due date of your tax return. And the important thing is that the funds stay with you forever. This is not an FSA, which is something a little bit different where those can expire. And again, this is one of the easiest things that you can do and the highest impact move that you can make at the end of the year. The reason why I like this so much is that you guys can open this up today. What's the date of today's video? December 7th. You can open this up today and make all of these contributions right now. A lot of the things, the other stuff that you do, such as paying kids, you have to do that throughout the year. This one, you can do this right this second. Now, I want to show you guys here in the instructions, it's straight from the IRS's mouth, all of these things that you guys can see. And again, in order to be eligible to have this, you have to have a high deductible health plan. And again, that you're not in Medicare and you're not a dependent. Again, this is 2024. The 2025 instructions haven't come out, but the laws are going to be exactly the same, just that the numbers are going to be a little bit different, but all the qualifications are the same. Now, again, one of the biggest things that I like to see or like to show you guys is that this amount of money, it is always tax free and you do not have to make the withdrawals in each year. What that means is that let's say you contribute to your account today of $1,000. You do not have to take that $1,000 out each year. It says it right here in the instructions, is that you do not have to make withdrawals from your HSA each year. You can receive distributions. For other reasons, the amount you withdraw will be subject to the tax. So what that means is that if you take the money out to go on vacation, you're going to have a 20% tax. You do not have to make the withdrawals every year. And again, right here, you can take the tax-free distributions from your HSA to be paid or reimbursed for qualified medical expenses after you establish HSA, which means that you can take money out at any time. Again, for qualified medical expenses right here. And again, this is why I like this so much. And I want to show you guys here that the contributions can be made at any time. And again, you can make HSA contributions. Again, this is 24, but it's going to be the same thing. You can make the contributions from 2024 through April 15th of 2025, or for this year, you can do it next year. And again, you can do this at any time. You can do this at any time until you file your tax return on the original due date. That is why I like this so much, is that you can literally open this today and you can make it 6 weeks from now, or almost 6 weeks from now, or 12 weeks from now, when your tax return is due. That is why I like this so much. Now, you guys might be wondering, how the hell do I open one of these things? And again, it is very simple. I just went to Fidelity. You guys can literally Google Fidelity, open an HSA, and it literally is right here. You just click on this button here and you guys can open them. Anybody can open these. And again, as long as you qualify for those, and it tells you right here, unlike an HSA, it's no use it or lose it. You don't have anything. Triple tax advantage. This is literally all right here. And again, guys, I would never bullshit you. It is literally right there. It is as simple as going to Fidelity, typing in open an HSA in Google, and starting right there. And you can literally open this up within 10 minutes. Now, the next thing that I like to tell you guys, the third one is you want to prepay your January expenses, assuming that you are a cash basis taxpayer, which most of us are. Now, the way that this works is that most of us are on a cash basis, and we want to think of this as a business, meaning that the cash basis means when you pay money, you get to deduct it whether or not you use the expenses today or in the next month. Now, I want to show you guys an example here. These are some of the expenses that you guys can have, or that you can prepay for January in December. Think of recurring expenses: your rent, utilities, insurance, software subscriptions, supplies, leases, marketing. You want to be looking for recurring expenses that you're going to have in January of 2026, but if you pay them in December of 2025, you get to deduct that on your tax return. And again, it is very imperative that you guys have this, or that you guys understand, is that you're paying for things that you would already do. And again, these are not to go out and buy a computer you don't need. These are expenses that you would have incurred anyway, and you get to deduct it. Now, the IRS has this 12-month rule, meaning that expenses must not go beyond 12 months. That means you can't really go out and deduct, you can't pay for 5 years of insurance. That's not going to work. You really can only go 12 months out in front. And again, I think paying for something more than a year in advance is kind of a waste of money. And again, you get to deduct that full amount in 2025. And again, this is great for business owners who are trying to reduce their taxable income. Now, again, I want to show you guys where this is in the IRS's example. And again, right here, this is straight from the IRS site. Right here, under the cash method, you can deduct expenses in the tax year in which you actually pay them, and it includes business expense for which you contest liability. However, this is that 12-month rule, basically meaning that if you pay 3 years in advance, you only get to deduct a portion of it. Now, I want to hyper focus here on number 2. And again, this is straight from the IRS's site, as you guys can see here, right from the IRS, right here. And again, we meet with all of our clients in December and we start to look at, okay, what recurring expenses do you have? Now, again, read this one here with me. You are a calendar year taxpayer, which means you pay taxes from January to December. All of you guys do that. And you pay $10,000 on July 1st of 2021 for a business insurance policy that is effective for 1 year, meaning that the 12-month rule applies and the full $10,000 deductible. Now, again, we want to look at things that are going to be recurring: rent, utilities, insurance, software, supplies, leases, marketing. Nowhere on there does it say go out and buy a car that you don't need. However, one of the most talked about things on TikTok is go out and buy a car, a really heavy one, you get to deduct all of it, even if you finance it. That is true. However, you don't really need that. And again, I want to focus on things that you actually need and that are coming up. Now, I want to show you an example of a tax return. And again, this is a Schedule C. There are different types of business returns, but they all go the same. This is going to be an example of 2024 because, again, the 2025's forms were not available when I had that. Now, This is somebody's tax return before prepaying anything. So you see they have normal expenses here like advertising, car and truck expenses, contract labor, insurance, rent, things like that. They have all of these expenses. And again, right here on the return here, it shows that you are taxed on your profit of $99,000, 369. And again, it says right here, if you have a profit, you get to do that. So it's showing you here on the return where all of this stuff goes. Now, this is somebody's return before they prepaid any expenses. And again, if we can just look here, they pay about $1,000 per month in rent. Now, I want to show you guys an example of a return with the prepaid one. These are all the expenses, but this was one of a client where we met with them before the year and said, hey, why don't you make an extra rent payment? Now, could they pay 12 months of rent in advance? Sure, they could, but that's not always the best cash flow. So we just had them pay January's rent in December of 2024. And again, this is the exact same return. So as you guys can see, their taxable income went from 99,369 all the way down to $98,000, $369. Now, again, this isn't going to set the world on fire, but it's more the idea is that you guys want to be looking for expenses that you're going to incur, and it doesn't have to be recurring. It could be travel. For example, if you know that you're going to go to a conference in February, you can buy those plane tickets, the cars, any other travel arrangements and tickets. You can buy those in December, even though you're not going until February. And that's an extra $5,000 that you were already going to incur anyways. Might as well pay for it this year. Now, bonus, you can actually pay for that. You can swipe your card in December, and you may not have to pay that until February, depending on your business credit card. And again, these are the things that you guys want to do. And these are three very easy things that you can do today to cut back on your taxes. Now, again, I want to hyper focus on these three things so that we can wrap up today's video. Number one, you want to contribute to a traditional IRA. Number two, have an HSA. And number three, you want to be prepaying your expenses in December. Now, if this is something that you want to do on your own and DIY it and struggle through it, great. You can watch this video and you'll have everything that you need. Or you can just have us do this for you. And again, to do that, click the link in the description of this video, apply to work with us, and we can do this. And if you guys get to us before the end of the year, we can actually help you open up all three of these things and make sure that you get all those deductions. Again, my name is JT, CPA here in Iowa. I look forward to seeing you guys on that call, and I'll talk to you guys again.